Well, you guys, I want to let you know that I just joined just a couple days ago, Citizens for Sound Money. You're going to be hearing more about that as I get more involved, but you know that I'm all about community and sound money, and you got to put your money where your mouth is. So I'm going to be pushing toward states to legalize gold and silver as sound money because I'm fighting for you and for my kids and et cetera, et cetera. So let's just go right into this because what we're talking about today are just recently big banks that are too big to fail, failing their living will test. Now, what is that and why does it even matter? Okay. Well, after the financial crisis in 2008, it was critically important for central banks and governments for you to still have confidence in the system that you just saw explode. So they came up with Dodd-Frank, which it was a book this high. It was passed before many of the laws have been written. That was back in 2010. Here we are in 2024. We've watched over these last 14 years it being dismantled, pushed off, the laws and the rules. But one of the things that have survived, at least to this point, are the living wills, where these too big to fail banks are supposed to have a plan to unwind during this next crisis without it being a financial crisis. Okay, here's the reality. All of that stuff was put in for your confidence because this is a con game. So let me show you what's happening with those living wills and the chances of them actually working. I'm going to take you back in time a little bit to 2016, although this would have been true right along since they started doing the living wills. Here we go. 5 too big to fail banks were violating those Dodd-Frank rules. Oh my goodness. Who were they? J.P. Morgan, Bank of America, Goldman Sachs, and Citigroup were 4 of those 5. Well, what were the consequences of them failing? Nada. Guess what happens when there are no consequences to bad behavior? That behavior continues and it gets even worse. So in this case, banks have taken on a whole lot more risk with your deposits, with your equity, and you don't even know it. So today, actually, this came out on June 21st, so Friday, Fed faults the living wills of, oh my goodness, who is that? Oh, Bank of America, Citi, Goldman, and J.P. Morgan. Why should they change? There's really no consequences. And even when there was a consequence to Wells Fargo, it was about them expanding their global footprint. There's no consequences to it. So what that means to you is that there is a lot more risk in the system and why you need physical gold and physical silver outside of this system, because this is how your wealth transfers. Are you shocked that it's the same ones over and over and over again? And I could have made a whole video just on all of these repeat offenders not having their wills in place. Now is when it's critically important for you to understand this, because these are the 4 of the biggest banks on Wall Street and they are incestuously interconnected. The next Lehman moment is very, very close. As you know, we already talked about what's happening at Synapse, and that link is below. If you haven't seen that video yet, make sure you go back and watch it, because this is a banking crisis that is already unrolling, but it hasn't hit critical mass yet where clients of the banks are able to remove their money and create a run on the banks. Everybody's going to be impacted by this, but that's what makes this video that important, that you see it, you watch it again and again, however many times you need to. You go back to the other video that I did on the crisis at Synapse, and you think about the ownership of who really owns these intangible assets, because this is all about you making educated choices that puts your best interest first. And how many times can you be lied to when you do not know the truth? I'm showing you the truth. The reality is there will be no soft landing here, because we are transitioning into a completely new system, and those are always violent. And there's no other option. But let me show you what's really happening and why this video is that important and how close we are. What you're looking at here is quarterly compression activity, and this is in the trillions of dollars. Now, I've talked about this in the past, and what that is, it was something that was created in 2013, because what imploded in 2008 were derivatives. And derivatives, really simply put, are just big bets. They can never convert a derivative into the underlying asset that that bet is against. But what's reality is those derivative bets have been growing and growing and growing because they're a trading vehicle. And banks make most of their money from trading, not from lending anymore. That's the old way. Today, it's about trading and picking up. So do they want you or me or anybody else to realize how much risk they are taking? No, they do not. Do not change behavior. Change how you account for behavior. That's what compression is all about. So they take this derivative that is similar, pretty similar to this derivative, and all of a sudden, instead of having $400 trillion in derivatives, you have $10 trillion in derivatives. That hides the risk. Now look at this. 2023, this is the most current report from the Office of the Comptroller of the Currency that tracks derivatives in the FDIC insured banks. So those 4 banks that have crappy living wills, that means they will not be able to be unwound in the next crisis without major problems. Okay, so 2023 had the highest level of compression activity ever. 257 trillion just in the last quarter alone, right? But take a look at where it started in the beginning was in, I hate when that doesn't work properly. I'm sorry. But 2013 is when they came up with this accounting alchemy to hide the truth of what's happening. And you can see, and let me even make it a little bit more clear, that this trading alchemy, this new accounting trick that they just created to cover up their trading activity so that you and I don't realize how much risk is really in the system. But it isn't just you and me. Nobody knows. Admittedly, all of the big kahuna banks, the BIZ, the IMF, the Federal Reserve, the FDIC, the World Bank, take your pick from that alphabet soup. Everybody admits that nobody really knows the true value at risk. I saw derivatives at 1.4 quadrillion, and that was before the central banks came to play in this arena. It's much, much worse, and you can't see it. And all this is designed to do is hide the risk until it's too late. And if your wealth is held inside of there, what are you going to do? Okay, from the same Office of the Comptroller of the Currency report, let's just look at the positions of those same 4 guys. So you're looking at Goldman, JP Morgan, Citi, and Bank of America, right? They have assets. Let me grab my little laser pointer. Okay, like for example, so you understand what you're looking at here. Goldman Sachs has assets of 521 billion, 130 million, right? But they have derivatives of 54 trillion, 130 billion, and 85 million. 99.9% of those are held for trading. In fact, of all of those big 4 banks, the one that holds the least amount, and that's still over 90%, is Bank of America. Do you see what I'm saying? And we don't really even know, even though they're claiming this is 54 trillion, the reality is that's compressed. We have no idea of the assets that are at risk. None. This will not be an easy unwind. Not at all. Now, the assets versus derivatives. What you're looking at here is that for every not quite $1, 96 cents of equity supports $103.87 of leverage. Leverage is bet upon bet upon bet upon bet, or another way to say it, debt upon debt upon debt upon debt. Like if you go and you take out a mortgage and you put a down payment down, right? But you still owe all the rest of that money. So in Goldman Sachs's case, where 99.9% of these things are held for trading, they don't even have $1 to support over almost $104 worth of debt. What do you think about that? Do you think that that they're vulnerable? Do you think that can easily be unwound in a crisis, particularly since we really don't know the level of derivatives? That is hidden. And the same thing is true for all of those same 4 repeat offenders. That is well above all commercial banks. And in fact, assets to derivatives, they have 38%, 38.61% in assets. These are just the top 4 of all of the assets in the banking sector. Those top 4 hold over almost 39% of all of the assets. That means most of those other smaller banks hold the lion's share of the assets. Yet they're trading in this whole entire banking system 87.42% of the derivatives that are compressed. Do you see what I'm trying to show you here? Because it's critically important that you understand this, and it matters to you. It matters to all of us, because when this explosion happens, all of your wealth evaporates into that black hole. That's Goldman Sachs, JP Morgan, Citi, Bank of America, Wells Fargo. The list goes on to all of those systemically important financial institutions that got bailed out in the last crisis. They can't be bailed out. It's too big. And everything is incestuously intertwined. Do not forget this. This is critically important. I want to repeat it with these lines so that you can see what I'm talking about. Assets to derivatives, that's you. That's your wealth that you've accumulated to your debts that you've accumulated. But they get to do it in an unlimited amount. You and I, the public, we have limitations, and yet you could still go bankrupt. If your debt to asset ratio, and then there's a crisis, if you can't bail yourself out, you're just about the right size to fail. That leverage ratio, debt upon debt upon debt upon debt, that's why Lehman went out. Do you think these guys are any different? No, I do not think so. So where you have all commercial banks with a leverage ratio on average of 9.13, in those 4 big banks that have just again failed the test, the leverage ratio on average, thanks to Bank of America, who has the lowest leverage ratio, is 20.67. And we don't even know how accurate that leverage ratio is because, again, and I cannot state this too much, we don't really know the value at risk, the VAR, the value at risk from all of these derivatives. These prices are merely about what the traders have agreed that they're worth, not reflecting the true value at risk. So let's keep this in mind, because there it is. If there's no consequences to bad behavior, why change? In fact, let's do things to hide that risk. And I'm going to tell you, we can't bail it out. We've printed way too much money to be able to do that. And beyond that, let's take a look, because we've talked about this before, and so is the Office of the Comptroller of the Currency. What you're looking, the fair value losses of banks in their securities portfolio declined through the end of 2023. Look at, here it is. These are all huge losses. So if there is a run on the bank and they are forced to sell off these assets, remember, we've talked about it a lot, right? Here is the market value. These are interest rates. These are the market value of those securities. As interest rates have been pushed up, the market value of those securities have tanked. So if there is a run on the bank, this is why your confidence is so critical for them. If there is a run on the bank and they are forced to sell these assets at a loss, what do you think is going to happen to all of those derivatives? That whole thing is going to explode. It's no longer going to be, the central banks are not going to be able to bail it out. It's just way too big. It's not going to remain stable. And listen to what they're saying. Higher for longer interest rates. This ain't going away. How could it go away? If they do a pivot, right? Because they hear the market value of the assets here. If they drop interest rates all the way to zero, what happens to the market value of those assets? But then you got to make sure that there are people that can buy them. So the Fed is saying at this point, it's not going to pivot. Now let me show you how these are incestuously intertwined again, according to the Office of the Comptroller of the Currency, because what we've been talking about, what you hear the talking heads talk about, is the smaller banks or the non-financial banking institutions, and how, well, they're at risk for commercial real estate and other funny things that they've done. But they neglect to talk about the big banks. And yet these big banks have financed all of these smaller or non-bank entities, right? Bank credit commitments to non-bank financial institutions. So here we are. They don't want to go back too far because then you might see something else that's even worse, right? But you can see how they have grown. They've almost doubled just since 2018. We've talked about so many of them. Financial transaction processing, so that's all the credit and debit cards. Private equity, which we've talked about, and how large that has grown. Broker dealers, insurance companies that you think, well, my insurance is guaranteed. Any contract is only as good as the counterparty to that contract. REITs, open-end investment funds, special purpose entities, collateralized loan obligations, CLO, ABSs, asset-backed securities. These are derivatives, people. These are leverage on top of leverage on top of leverage that your deposits have funded. Let's be clear about that. And many other things, real estate lenders and lessors, consumer lenders, etc. Bank lending to non-bank financial institutions can be informative about the amount of leverage used by those non-bank financial institutions and shed light on their interconnectedness with the rest of the financial system. So it does not matter where this explosion occurs. It will travel not just through the U.S., but globally. Because while they keep talking about deglobalization in the manufacturing sector and in the supply chains, they ain't talking about that in the financial system. They want a one world government and I don't know about the government, but they want a one world currency. Period. It is so much easier to control that way. And they need a big crisis to make this shift. And this is just what they're reporting in the Financial Stability Report. It does not look good. Do you see why the banks need to have a living will? But can you also see how they really don't give a crap about that? It's just window dressing to make you feel confident, and they keep failing that test over and over and over again without consequence. How safe do you really feel? I don't trust Wall Street, but I do trust physical gold and physical silver in my possession. I trust sound money. That's the fight. And maybe, what is that, David and Goliath? We can make a difference. We can create a very profound, peaceful revolution just by converting fiat money garbage into sound money. I'm going to do my best for you, that's for sure. And so a little update on where spot gold and spot silver is. They are in a consolidation mode after a major breakout. Take advantage of it. Lord knows central banks are sure taking advantage of it, and they're using it to hide all of their purchasing. But they're purchasing because they know what I just showed you. They know it big time. And now you know it too. When these banks implode, you better have food, water, energy, security, barterability, wealth preservation, community, and shelter. You've got to get this done. We are clearly running out of time. There is already a banking crisis underway. Click that link. Just because you can't see it yet doesn't mean it's not happening. Please get into position while you still can. And, you know, to execute the whole mantra is really, I don't think we have enough time. And that's why local community has become that important, to make sure that you have security in all those areas of the mantra. But globally, we have to come together and do that very peaceful revolution. Just convert this crap, of which there's an unlimited amount, into sound money, of which there is a finite amount, and used in every single sector of the global economy. Zang Enterprises supports community and sound money, and we do it on a global basis because we're all in this together. And I absolutely know, I'm getting chills. I absolutely know that together we can make a positive difference for a lot of people. Just join the community. Share these videos, please. People need to understand. If they don't know about it, they can't make educated choices. And this is all about educated choices. So don't forget to take a look at our most recent video about the public opening their eyes. This is what gives me hope. We need the public to open their eyes. That's what I'm trying to do. And also the recent interview I did with BitBoy Crypto V2. All links are in the description. But again, I'm going to say, if you haven't watched that video on Synapse, or if you have and you want a little reminder, make that happen. Please make educated choices. Until next we meet, please be safe out there. Bye-bye.